Nirmal Jain of IIFL Group now joins us to talk about markets, valuations, what's happening to business, and where the NBFCs in general are headed. Nirmal, fantastic to have you back on ET now. Thank you for joining us.
Thank you, Nikunj. Thanks.
What's your understanding of the economy?
I think economy is recovering faster than what most people expected, because I think the people did not know a pandemic is unprecedented in our lifetimes. So the fear actually had gripped all of us. Everybody thought it'll be like it'll go into recession for a longer time period. There'll be bankruptcies, but at least there are few segments or few sectors that are impacted very badly, like hotel or restaurant or but more or less, this again shows that Indian entrepreneurs in particular are very resilient. They lived through demonetization, they lived through GST transition, and this also. Things are recovering and they're bouncing back much faster. And also, if you see the results of last quarter, then there's another discovery. Most of the companies have discovered that huge amount of cost saving is possible as people work from home, people travel less, lots of overheads they can cut down. And that's why, if you see the last quarter, the top line has not grown, but the bottom line, more or less, everybody has done well. So, just to summarize, I think whether we call it V-shaped or whatever shape, but I think there's a recovery, and recovery is fairly strong. There are some skeptics who would still, would say that it's a pent-up demand, but I think even if it's a pent-up demand, the entire demand doesn't come up in 1 month. So what we are seeing is a good recovery.
Okay. What role do you think low interest rates have played in this recovery?
Huge. If you see the history of financial markets world over, any country, whenever interest rates go down, that's the time growth will pick up. And as you can understand intuitively also, if the home loan rates now 6.75, 6.95, that's the time when people really, they see that their EMIs have become affordable, they want to buy a house, construction activity gets a fillip. Also, if the interest rates become low, then many people, the expansion plans look more viable. So I think the low interest rate in any country, any economy has a big role in reviving growth. And I only hope and think that RBI and government will maintain this kind of benign liquidity and falling interest rate scenario. It looks like it will happen. See, even after 2008 crisis, if you remember, Nikunj, the low interest rate regime continued because of quantitative easing or whatever. I think that played out for at least 3 to 4 years. And that is what leads to faster growth. So I think what we are going to see now, and that happens with after every crisis, is that the low interest rate regime continues for a few years, and that is the strongest driver for growth.
Nirmal, so far this month itself, we've seen a historic outpouring in from the FIIs, inflows of about 60,000 crore rupees. But on the same hand, you've got a complete reverse picture in terms of DII selling. However said and done, they were buyers at March lows. What explains this phenomena? Or would you say DIIs were just the smarter of the lot, buying at the lows and selling at the top?
No, I'm not so sure, because when we look at next March, we don't know whether they look smarter or FIs will look smarter, but that is not the point. I think let's understand what are the underlying factors. So globally, if you see, the liquidity is very benign. There's a lot of money is being printed by central bank, and money is like water, liquid. It finds its own, it basically gets out of the system and tries to look for some risk assets, because the interest rates in all the developing countries are somewhere like 0 to 1%, and in some cases even negative. So they don't have a choice but to look for assets, at least a part of allocation of their fund they want to do where they can earn more. And fortunately for India, at least from stock market point of view or from the flow of capital point of view, is that China, people are a little concerned. Of course, China still, the economy is doing well, but more and more people want to have alternative. They just don't want to put everything in China, or they want to reduce their allocation to China. And India is the obvious beneficiary of that. So we have a scenario where world over, developing countries, and they matter because they only have the investable money that will come to our country. Developed countries, sorry, not developing country. So the developed countries' interest rate is low. Liquidity is being infused by the their central bank and government very profusely, and that money is basically finding way to Indian markets. There may be some corrections, that is always characteristic of this market, but I think this scenario will continue for quite some time. Now, coming to domestic, of course, because of valuations, people get a little worried, a little concerned. But I have a feeling that that money might now flow to the mid cap and small cap. And I would think that the rally can broaden as the domestics who might sell out, in the large caps where FPIs are buying. And that money might find its way to mid caps and small caps, where many of domestic fund managers will find great values.
Sure, makes sense. Nirmal, what started off with a very narrow rally, specifically IT, pharma and Reliance Industries, is now spreading across the cyclicals as well. You're seeing autos perform, you're seeing a big surge come in on private banks first, and now PSUs as well playing catch up. And then, of course, you've got many other sectors like metals as well, which are playing catch up, and some of these names are actually sitting at 52-week highs. You think time has come to bet on economy-linked sectors as well?
Yes, I think there's a time when you should allocate part of your equity assets to cyclicals as well, because they're bitten down. When we are looking at 52 weeks high, because the last 52 weeks were extremely bad for these sectors, and now things are recovering. So, like say for instance, steel sector or aluminum sector, as long as China quantitative easing is continuing there, and which is most likely scenario, then there's a demand. No new capacity has come up, or hardly any new capacity has come up, say in last 10 years. And so they were far below their intrinsic value or replacement value, whatever you call it. And obviously there's a demand surge because of investment which government is driving, and also the recovery in any economy would warrant. So from their very lows, which were sort of irrational lows, many of these sectors are bouncing back. So infrastructure, steel, aluminum, metals, cyclical, cement, in all these sectors, I think we should now see participating in the rally. See, because they are great values and they are coming to the EBITDA and profits will see a significant jump given the way the scenario is evolving now.
Nirmal, hi there, afternoon. Wanted to get in your take as well with, a lot of people talking about this major tectonic shift to the digital world, to tech really playing a big role in our lives, which we have seen. Do you believe that there is opportunity within this basket? Are you being very selective?
So, in India, we don't have too many listed companies, there are very few. And the few that are there, they become very pricey also. So, there's an opportunity, of course, with many investors are trying to play through PE funds and, the venture funds. But, I think digital is impacting every sector and every company. So even if you look at, say, NBFC business or our financial services, say, stock market or wealth management, all of them are seeing a major paradigm change, shift because of digital technology. So I think we'll see that digital technology is playing out, all over, and even larger players probably will adopt and will innovate in this. So, who will be able to get more out of that? I mean, that all time will tell. But pure digital players, there are not too many on the markets today. But I think next few years we'll see that some of the companies go public, like companies like Zomato, companies like Policy Bazaar. Many of these are already planning their IPOs, and I think so many more companies will come to market. And at this point in time, there are not too many players in India, unlike say US or China. But in next 5 years, this scenario will change radically.
Nirmal, the sound bites that we're getting from a lot of corporates is that it's the rural theme that's really working for them, particularly in this time of a pandemic. That's where demand has seen a decisive pickup. Do you think that this sort of a trend is sustainable, with rural outpacing urban demand for a lot of these companies in sectors like FMCG, auto, etc.?
I think so, because the government's policies have been very focused on getting money into the rural farmers. One, monsoon has been good, and also the reforms that have been carried out in agriculture, although they were some oppositions, but actually they will be, over a medium term, they will really help the rural economy. And when we see that a lot of investment in rural infrastructure also basically becomes income in the hands of rural folks in some way or other, the DBT now, which is gaining traction scale, is also reducing the leakages. All these factors put together, I think rural economy will, that traction will continue. Only one, caution is that if the monsoon for some regions becomes, maybe this year is gone, hopefully Rabi crop will also be good because monsoon was good, so water tables are high. But I think so at least for next 1 year, you should not have too much of a worry. This should continue.
All right, Nirmal, it's been a pleasure having you on board. Thanks much for taking time out and joining in, giving us your outlook on the markets and where you're sensing opportunity within individual sectors.